Hi, everyone. This is Jeff Praissman with Interactive Brokers Podcast. It's my pleasure to welcome back for our midweek podcast Scott Bauer from Prosper Trading Academy. Hey, Scott, how are you?
Jeff, I am just fantastic. How are you?
I'm doing great, and I love having you come in here for these Wednesday sessions where we just spend a few minutes talking about the past week in the market and then what's up ahead. I want to kick it off with Treasury yields, and they've been climbing steadily over the past week, with the 10-week touching, I think, around 4.3%. How do you interpret this bond market behavior against the backdrop of the strong equity performance we've been seeing as well?
Sure, especially after the Fed reduced rates a quarter point last week. That really didn't sink into the longer end of the yield, the 10, 20, 30 year. And I think what that tells us is there's a lot of, let's call it consternation. There's a lot of concern that inflation is not under control or that central banks, not just our central bank, but central banks around the world maybe are in a gregarious place here. And, what that means is by the longer end of the curve not coming down, it means that investors are looking for higher and higher yield to be able to buy into treasury treasury funds or even other central banks around the world. So there is that concern there. We'll see what happens if the Fed continues with the rate decreases coming up next month and then maybe another cut in December. We'll see if that does follow.
Yeah, and switching gears a little bit, everyone's always talking about the Mag 7 and large caps and all household names, but I kind of want to focus on small caps because no one really mentions them. And they've, once again, significantly underperformed large caps again this past week. Is this divergence a warning sign for the broader market, or is it just simply a reflection of that ongoing concentration of these mega cap tech
Yeah, I
stocks?
think you have a couple things working here. The small caps have really lagged for a long time, and they made an incredible run over the last month or so to really gain some ground. But then after that Fed cut, again, with not seeing the bond market really reflect that hurt the small caps because these small cap stocks, those are the ones that need to go out and they need to borrow more. They need to really lean on to the bond market and interest rates and not seeing those rates that they would need to lock in to borrow money for R&D and for expansion. I think that's why we're seeing the small caps get hit again.
Got it. And they continually to pivot away from these tech stocks because oil historically has been very important, and I feel like it's this last couple of years, it's kind of been a little not as much of a headline grabber with all the tech action we're seeing. The oil price has been particularly volatile lately
Yep.
with WTI crude. It was experiencing some significant daily swings. What factors are driving this energy market turbulence, and what might it signal about global economy expectations?
I think we have both sides of the coin here. Fundamentally, there's still supply outweighs demand. When you look at basic economics there, we should see prices coming down, which we have. However, there's a lot of volatility in the oil markets because now all of a sudden we saw inventories decline a little bit and maybe the geopolitical risk is ratcheting up a little bit, right? The Ukraine Russia situation is probably a bit more volatile at this point than what we have seen. In fact, we saw oil prices actually tick up after Ukraine's military said that it struck two oil pumping stations in Russia. So I think we're trying to balance that right now. Globally, I believe there's still more supply than the demand is there. But you know that whenever there's a geopolitical event or the risk of that, boy, that typically will hit the oil market pretty quickly.
Yeah, no, absolutely. And now I want to repivot to the next 5 days ahead. So this Friday, we got the personal consumption expenditure inflation report, or the PCE, coming out. What impact could this Fed preferred inflation gauge have on market expectations for further cuts and equity valuations?
The Fed has said, and we can all see through the data, that inflation has been sticky, right? It's not coming down. It's not necessarily progressing much higher. So PCE is going to be a real close one to watch here. And the market, the expectations are that we are going to see PCE prices ticking up slightly month over month. So if we do see that, I think the market will take that in stride as long as it is within kind of that threshold that the market is expecting. And I think it's about 0.3% month over month. And then year over year, it's supposed to remain flat at 2.9%. Now, We know the Fed wants to see this down towards 2%, so it is sticky. But I think that as long as we don't see a 3 handle on that year over year inflation, the market should take it in stride.
Got it. And I want to wrap it up with something I know that's near and dear to your heart, the VIX.
Yeah.
And usually here it looks like you're in your home office, but a lot of times you're right on the floor, right in front of that pit. And it's remained surprisingly subdued despite all the geopolitical tensions and economic uncertainties we're facing right now. Do you anticipate volatility picking up in the coming days? And if so, possible catalyst going to trigger a shift considering everything we're going through right now?
I definitely do. I think it is subdued. The market trend has been grinding higher. So maybe that's playing into a little bit about the VIX being a little subdued. But when you look at a VIX of 16, which is pretty much where we are right now, that really correlates to a 1% daily move in the S&Ps, which we're right in that ballpark right there. But with all of the, I would say, macro headwinds, whether it be the Fed, interest rates, inflation, some geopolitical risks here, I would anticipate volatility to pick up. In fact, just over the last couple of days, Jeff, and even this morning, we're starting to see some of those big out of the money call buyers in the VIX strikes like up at the 60, 70 strike start coming back in again. So I would expect vol to pick up.
Uh, Scott, this has been great. Always appreciate you coming by. For our listeners, you can find more from Scott at prospertrading.com, as well as on our website. We do a podcast probably about every other week on the markets. And until next time, Scott, thank you for swinging by.
Thank you so much, Jeff. Always great to be here.
Perfect.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice.